Hello, it's Friday, January 12th, 2007. This is Brian Shannon speaking from Alpha Trends, and the market has closed a couple hours ago. Got a late wrap up here. But last we spoke 2 days ago, we were looking at the market, and while most people have been focusing on this trend line break, I've been pointing out to you that a trend line break is usually insignificant. It only means that the rate of ascent has slowed, and that the more important thing was that the market continued to hold above this prior level of resistance, which has been acting as support, and also finding support along this rising 50-day moving average. Again, the direction of the 50-day moving average, as long as that is higher, it means that the market remains innocent till proven guilty, meaning we give the benefit of the doubt to the buyers that there's going to be shakeouts from time to time that are going to tempt you to sell or to get short. And there's nothing wrong with selling when in fear of it looks like the market's about to go lower. However, to sell it short when it's in a primary uptrend, that's why we've had such a good move in here recently. I like to call it a shake and squeeze. They shook them out and then they squeezed them higher. And when we were 2 days ago was the last wrap up I did. I said that I thought breaking above this resistance at 141.50, and it looked like it was going to do that, would lead to a move up towards about 142.5 to 143, and that's where we are right now, is up close to 143. As you remember, I was pointing out that this declining 5-day moving average had been acting as resistance, and these moving averages in here were starting to crisscross. That's a sign of accumulation. I've got a class next Friday at MarketWise that you can sign up for on that site where I teach you how to recognize exactly when to become more bullish, like I started to on Wednesday, and also when to decide, hey, this is when to go for it, and what these moving averages are. As you see up here, I have custom formula. I just do that to hide them so you guys don't know what I'm looking at, so maybe it'll induce you to take a class and I can diversify my income a little bit. So there's my sales pitch for you before I continue on. The market did extend that rally today nicely. So we saw that initially there was a little bit of resistance at this prior high, the year high that is, and that resistance seemed to act as support so far. So the market's at new highs for the year and new highs for the move, I think, on a closing basis. Let's take a look and confirm that. This close was 41.80. What am I looking at? 43.12, I guess. And here we are at 43.24. So we're at new highs for the year. A lot of people are probably once again underperforming the market. Don't worry about it. We're 12 days into the market or whatever it is. And I think that, again, because these moving averages have been crisscrossing, it still says there's a little bit of a mixed message in here. Now, what might occur is what I alluded to in the NASDAQ, that maybe we'll get a breakout to a new high, but you basically didn't want to be a buyer of that. You should have been a buyer, like I was saying, back in here when it was in a clear uptrend, and that the momentum started to accelerate because the shorts were giving up on their positions, and basically you have to if you're short. You got to wait for the market to roll back over before you decide to get short. Don't sell short into strength, and don't buy weakness. That's what specialists do. Wait for a pullback in an overall uptrend and then buy the strength and set your stop. But here we look at the NASDAQ. It's clearly at a new high for the year and for this move. So if we look back to a monthly time frame, we can see in here, this is where we're at. And these levels from 2001 look like they could be in play. We still have to give the benefit of the doubt to the buyers. We do have the 10 above the 20 above the 50-day moving average. And realistically, we should be very bullish on this market. I'm just a little bit cautious because the market has extended. It is extended in here. It's just rallied from 42.5 to 45.30. So you have to ask yourself again, always, where does the market come from? Where does it have the potential to go? So it's expended a lot of energy. It can keep going. Markets do that a lot. Just be careful. For now, I'm going to say the level to watch that'll be important in the intermediate term is about 44.90. But we're in a bull market, so the odds favor continued upside. Semiconductors, still overall a mixed picture, but even in here, we were looking at a certain level of resistance, which was right over in here, and that's where I thought, breaking above that 34.30 level was something that would lead to a rally up to 35. Now the 35 level has been attained. It pushed above that, and now we're closing right around in that area. We still need for a clear breakout, I think above $36 a share. So longer term, it's still in a sideways range. Here's basically the midpoint of that. So we're getting extended, and we're coming up towards the top end of that range. It's possible it could break out. I don't think it's as likely. So just be careful if you're long the semiconductors. You want to protect yourself with stops, and we're starting to see a little bit of indecision in this trend right in here. Maybe a correction through time because we have these moving averages crisscross. So the market has expended good energy, and it's extended in the short term. So just be careful. The mid caps we're looking at and saying that a break above this 146.50 level should lead to a rally to test the prior resistance at 148 to 148 and a quarter. That level was tested. It acted as support, and this market is also adding to its gains. It found support right in here. A lot of people were pointing these trend line breaks in the lower highs and lower lows, and I noted those as well. But again, because the 50-day moving average is advancing, innocent till proven guilty. The burden of proof is upon the sellers. Now this market's reaching its highs from late last year up near this 150, 150 and a half level. So it just pays to be cautious in here. Don't be very aggressive in getting involved in new positions in these types of stocks. And of course, like I said, we've got earnings coming up too. So it's, we've got to start being very careful about being aware of when a particular company is reporting earnings. Now is the time to really focus on that and realize that it's going to be a stock picker's environment in over the next coming weeks. Let's take a look at the stocks we've been involved in. IMOS, this is a company called Chipmos. Let me see what happened there, why it didn't. IMOS, though, we got involved at $6.87, I believe, on this day right here. And our stop was $6.88. So we got stopped out of that today with a gain of a penny. So basically a scratch trade. ISIS, we got involved at $11.25 right here. Perfect place to buy. And I'm going to teach you how to do that in that class next week, if I could throw another plug in there. But our stop was at $11.19. I said to raise it yesterday to $11.78, and that stop was not hit. So our target did get hit at $12.50, so I think you should have sold half of your position. And if you're still in some of this stock, the balance of it ought to be at about $12.22 for the remaining shares in there. That was a nice trade. LTXX, we got involved in at $5.55 right here on this day. Our stop was up at $5.68, and that did get tagged at the end of the day. So out of that one with a 13-cent gain in LTXX. Penn Gaming, PENN, we got involved in this one at 41.03 right here on this day, and I'd suggested raising your stop to $41.80. So our stop was hit today at 41.80, and that was a pretty nice little gain, I'd say, at of about $1.73. So Penn National Gaming was a very good trade. Unfortunately, I didn't get involved in it. Hopefully some of you guys did. The stocks that I mentioned yesterday, Align Technology, symbol ALGN. What we wanted to do was buy the stock above 1422. That occurred early on. The stock made a very nice little rally up in here. I would say at this point, raise your stop to $14.38. Asia, we got stopped out of this this week right over here. We were looking for an entry on this day. We were looking for an entry on this day. And wouldn't you know it, the stock gaps up a dollar or so. Almost hit our price target. No play in there. It's a bummer when that happens, to be stalking it so closely 3 days in a row and then to see it run without you. But you know what? That's what happens in trading. That's can't do anything about it. Mama, we were looking to buy above 595. Mama didn't participate in the rally, so there was no reason to get involved there. BCRX, what we were looking for in here was a rally up to 1105. That was the high of the day. And then we were going to sell short this stock below $10.90. So we should have gotten involved in a short sale right in here. Unfortunately, it didn't lead to continued downward momentum. Let's lower our stop to $11. Actually, we'll keep our stop at $11.10 in BCRX.